Hi, thanks for tuning in. This is a weekend review for the week ending August 25th, 2023. Looking at a weekly chart of the S&P 500. We do have a histogram flip negative, which is a sell signal. Buy signal occurred back here in March. And again, these things, you take it with the weight of the evidence, but like, for example, we're still above a rising 20. Okay. So as long as you're above this rising 20 here at 430, there's no reason to anticipate a collapse. However, get below 20, 420 will come in a hurry, and really this 414 level. Now it's possible they come all the way back down here to the 50. Right? Just like they did here. When the slope of the 50 changed and they got really far below it, they rallied a whole bunch to come test it. But the slope had flipped down. Okay. Well, this is the inverse of that. We rallied a whole bunch. Now, the 50 is no longer negative. It's positive. Right? Just like right here, where they sliced through it and it rolled. Right? It's entirely possible she comes all the way back down to the 50 on the weekly. And that might take time. It might look structurally something like this. It might look more like a triangle. We really don't know. At this point, we've got the 510 bear cross, which just happened. And we have 2 weekly closes below the 10. Enough to flip the histogram negative and PPO to roll. So not exactly a good look. Zooming into the daily. I think the last time we talked, or I did one of these videos, was back here towards the beginning of August, where we did have momentum roll over, which I said, look for a weekly consolidation, look for a pullback to the 10 and the 20, and look for it to hold, which is exactly what's happened so far. And I do anticipate a rally would at minimum get back up here to about 450 and break the previous week's high, which is 445.22. Looking here at the daily, though, you see the histogram is starting to bottom out, which is kind of what happens here towards the bottom. And PPO is starting to curl. That being said, we've pulled back to the 80. And now look at this. Large rally. So, right, here's your trend. Here's a left shoulder, a head, and a right shoulder. So if this thing falls, right, you can bet your bottom dollar we're coming all the way back down to here, that 408 area that I was talking about. 410, 420, 414, even 408. Right, closing below the 200 like they did back here for a week or two, make everyone think it's all over. So that's just the quick run through here on SPY in summary, and this is it for all equities for that matter. Tech is still outperforming everything else, but we'll take a look at them next. But the reality is we've pulled back. We've done the daily mean reversion thing that I had called out back here at the beginning of August. We've done it. Okay? And we've pulled back to the 10s and the 20s. But if you keep zooming out, say, all right, well, this is the monthly 5, and it should hold here. And after something like this occurs, you get this bull cross. Like, let's just go back and look at all the times it's happened. Right? As soon as it happens, you don't really give up the 5 on the monthly. And if you do, you just pull back to the 10 or the 20. Same kind of call that I made on weekly here, right? Like, I was expecting when the daily rolled that we would lose the weekly 5, which we did. Right now the weekly's rolling, expect to lose the monthly 5, which we might. That being said, what does it do? It means dips into the 10 and the 20 for buying. And again, where is that? 420. So from where I sit, I mean, it's entirely possible. This is just the A leg. We're going to sit here and rally for a couple weeks. And then we get that zigzag structure coming down here to wave 1, which I think is back here. Whether it's that, whether it's something like this, doesn't really matter. This level is very, very important to the market. 410 to 418, that general zone. And if you put up the fibs here, the 414 level, these are important levels. And really, they'll align with the 50. Okay, so even if you don't look at levels at all, and all of this is just nonsense, and you're just looking at a trend, right, like a quarterly trend that is up. Again, look at this quarter though, right? And did she just come back here to this, the high here, 457, find supply like she did before? Sure looks like it. And I mean, structure-wise, this could be a triangle. There's no reason it couldn't. It also could be a zigzag. I'm sorry, or a flat. I mean, there's really only 3 solutions for this corrective pattern. And I want you to point out here that, you do have the bear cross here. Right, so zoom out again. And what do you have? An outside year last year. Right, so if you get an outside year and you zoom into the quarter, you could have a broadening formation here. So I don't know. We'll have to see how this one plays out. I'm not entirely convinced that this thing's going to go higher or lower, which makes me think something like a big triangle is in order, which means the bears get their way into probably, I don't know, Q1, Q2, and then they rally again back into the election, right? And you get that triangle look. But that's enough on SPY. Let's throw the ball around the horn a little bit. So here are the cues, right? Pulling back. Momentum has rolled. Momentum peaks before price. So price likely has one more rally up here, which will be sold. Zoom into SMH, right? She's pulled back to the trend here and is holding. But again, I mean, either she had the ABC already and it was real shallow, or it's coming, right? And in that sense, you will break this uptrend and you will pull back to this very, very, very strong level of support back here between 124 and 130. So, we've peaked in momentum across the board on all of the strongest indexes. And you did it here too, even on the weakest indexes, and you can't even print a higher high. All right, like at least QQQ's peak here is above where she was back here. IWM can't get moving, and this is really the non-confirmation that continues. And I hate getting extremely subjective because we could do this all day, but I do see this ABC zigzag, a bigger zigzag. I mean, why couldn't we have a bigger one again, right? I don't know. I'm not here to guess. All I can say is she's done nothing. Okay, here we are again. The year is 2018. The stock has appreciated 4%. So we could sit here and pretend like, small caps are overvalued, but they've done nothing in 5 years. Or QQQ 2018, right? Even the peak here is up 100%. Right? Even the same thing with SPY. It's not 100, right? But it's pretty good. It's 53. Going back 5 years. So IWM is dramatically underperforming. That's the point, and she is still underperforming. So if we zoom in, look at the structure, we still have this big symmetrical triangle. We still have this big trading range. The low is here, though. I want to point that out. And because the low is here, right, the triangle has to be counted as such. So A, B, C, D, E. That's how I see this. This can continue for quite a while into the end of the year, quite frankly. And what you would expect is something like this, ABC down. Okay, so rally to start, rejection up here at the 5 and the 10 at around 188, and then a pullback to 172 where ultimately she finds a bid. All right, same thing we've had here. Every single one of these has been an ABC structure, up and down. And then boom, here's another one. All right, even going up, here's another one. These zigzags are everywhere, and it's just it just confuses the heck out of all of market participants. And if you look at something like a small cap, like, you know, one of the leaders within here is Crocs. Like, look at what she's done. Absolutely nothing. Puts in an ABC. So we'll see if she's done. But let's focus a little bit more on just this non-confirmation, right? Because it's in IWM and it's in IYT. And the point I'm getting at is that let's talk about really what happened this week. We've got NVDA, which now has put in what looks like an exhaustion gap on volume. And if you look at the weekly, kind of a big upper wick on volume, and momentum is rolled. Just like you see here, momentum peaked back here, and we've had 2 more highs. It's possible she makes one more, that magic number 3, before she ultimately collapses. But the reality is it doesn't matter. She did the thing that she was supposed to do. And where should she catch a bid? Well, ultimately, right, we want to see her come all the way back down to this zone, come into this area, because if you zoom into the deal, you'll see it's completely wide open. Now, that being said, is this the breakaway gap right here, right? You come back here on the chart, and you can see breakaway gap, this massive gap from earnings back in February. And then you have another one up here. And now we had another earnings gap, all 3 months apart. And this gap was instantly sold, okay? And so if this is the breakaway gap and this is the runaway gap, this would be the exhaustion gap. And if you take the distance between the breakaway and the runaway, that gives you the measuring gap and where you would expect to find a top. And looking right here, sure as heck, that rule predicted or projected a top to occur right around August 21st. Why would that be? Well, because the distance between the first gap and the second gap is exactly 1/4. These were earnings gaps. So it makes sense that it would occur exactly 1/4 later on this most recent earnings release. That being said, monthly has done quite a bit, is outside on the monthly, which is a very important piece of information. Kind of right where we expected her to be. Okay? And if we line these up down here, you have this channel. We're at the top of the channel. She needs to come back down in and let this thing cool off on the weekly, right? Because right now, this is the angle of attack. So this is about how long it'll take, February, before we would expect NVIDIA to be a buy. And honestly, this thing could be done. It's up almost 400%. So what would we expect? Some sideways in time to digest that move. We've had no sideways action. That being said, what we want to see is a rotation out of SMH, the thing that has been leading since the lows. SMH is now up 100% in 10 months. And we need to see that rotate into something like IWM or IYT. Okay? And IYT, which is the transports, Dow Theory loves this ETF, which is why I focus so much on them. Had a breakout of this triangle here, the smaller one here, came up into this resistance line, went above it, and now has pulled back for 4 straight weeks into a rising 10. Now again, what did I say back here? Expect there to be a throwback into this level and possibly this level in the rising 20, which is what we have now, and expect that to be bought because the histogram is positive and PPO is suggesting dips into these rising moving averages or mean within the context of an uptrend to be bought. What do I mean? Here's your uptrend, right? Start back here, you've got a high, you've got a low, you've got a high, you've got a higher low, you've got another high. We're just looking for that higher low. She could pull back all the way to 226, and then we would expect her to put in a higher high. Because that's the character of this market, and it hasn't changed going back to October 10th. Now, some of the leaders within here are Delta Airlines, Uber, etc. But are we going to see a rotation into this ETF? I mean, monthly is telling me to look at dips to be buys now. And only since June should we have been looking at that. And now she's pulled all the way back to the 5, which is what we would expect to hold given the momentum configuration. So a rising 5 should hold. Into when? Into the end of the month. So you would expect the lows to be in and 245 to hold. Zooming into the daily, you have yourself a nice little doji at a rising 80. Now she sliced through the 50, but it doesn't change the slope of the 50. The slope of the 50 is still up. What has to happen here is price either pulls all the way back to the bottom of this channel and then goes back to the top, or pulls back to the top from where she is now. Right? This little gap fill at 241, or where she closed on Friday at 245. It doesn't really matter. It's less than 1%. And buy when momentum is down here has historically been the play. So that's what we're looking for here in transports. So we're looking for a rotation out of semis and into transports and small caps. And looking at IWM is, again, same type of doji on Friday at a very, very critical point on the chart. The 200 and this confluence of support. Zooming into the weekly like we already did, you can see still stuck in a range. This thing is building energy for a huge move. And the structure right now is big move down, ABC up, big move down, which brings in 131. That ABC on the quarterly, somewhere around here. That's the structure. And it's also possible, by the way, just to give you the bull case, that this is just some big 1-2 and we're about to start a large ascend for 3. Again, this thing's gone nowhere in 5 years. The sentiment on this is absolutely awful. And 10% of this is XLF. And XLF is also at a very important part of the chart. Very, very important. I mean, look at this. This $31 level is 15 years old. And structurally, this is an expanding flat. So that enables, right? 1, 2, 3, 4, 5. This enables, having completed this corrective pattern, enables another move like this from here. And right now, we're in the 2 where the risk reward is the greatest. Now she could still pull back all the way down here to 29. You know, could pull back to the 50, make everyone think this line is lost. Probably somewhere like right around there. Could be Q4 2024 before she decides to leave. But XLF and IWM are building energy for a large move. And right now, SPY could continue, or SPY could pull back in a larger triangle. We don't really know. So what does that mean? We look at the defensive assets, we look at the macro to help us with that. So let's take a look at those right now. So SPY versus TLT, equities still favored over bonds, and honestly getting a bit oversold on the equity side, but you would expect this to continue. What do I mean? Every pullback to the 50 has been bought, and every time she pulls back to the 50, every bond bull screams it's time for bonds. We are so far away from saying it's time for bonds. Right? We're so far away. SPY versus the dollar, I called it right here. Very specifically, August 9th, a change in character has occurred. Right? Now the slope of the 50 is still up, but now the slope of the 50 is flat. So we're looking for this ratio to reverse. This is one for the bulls. And again, still in an uptrend since the October lows. Every dip that you've seen in this ratio has been for buying. The higher lows down here around 1462 could pull back even a little bit more, but you would expect this ratio to hold. So what's that saying? Put your cash to work in the coming weeks. Where? Possibly at SPY. SPY versus gold. The daily, now we're below the 50. This is a bit of concern, and we're at the zero line and we're accelerating lower. So if this mean reversion isn't mean reversion, but in fact is really the start of something new that started here in July, we need to be paying attention. And looking at the weekly, it's entirely possible that's what's going on here. Right? Because you do have this descending triangle, right? Your A, B, C, pull back D, come back here, E, and then the move actually happens. That could certainly happen. So when I look at something like this, and I'd say, she did not come up to the 2.5 and set a higher high. She actually came up lower, went sideways, and is now rolling. Right? You can see the histogram rolling, and you zoom into the daily and you say, well, is she about to give up the 50 here? So this is something you got to watch. So gold definitely showing relative strength. Definitely looking like the flight to safety candidate. And DBC versus SPY, right? I called this back here in June. I said, look for equities to underperform commodities in the coming months until you get a pullback to around 1720, right? Which is exactly what has happened. And now RSI's back at 50 and MACD's back towards the zero line, which is exactly what you wanted to see, and we pulled back to a rising 50. Is it time for equities now to outperform commodities? So looking at the macro, it's telling me that gold is the flight to safety candidate. That's what I'm seeing. And so when I zoom in to these charts, so if in fact SPY is going to take a breather here, is gold going to run now? What stands out to me on this chart is that gold broke last month's low of 175.79. So that's what I'm watching. Does she close the month? Sorry, does she close the quarter, Q3, inside Q2? 175.79 is a very important level on the quarterly chart. Zoom into the monthly. We're below last month's low. Broke that low as well. Do we have an ABC setting up? Is this really the level we want to be going at? 171, or is it 168? Is it the rising 50 again? And really, if it's all the way back down here, why would we want it? We just came here, right? So if it's all the way back down here, you start to introduce this look, something like that. And if that's really what's going on, you could get some big look like this all the way back down here to the lows of 100. So again, I'm not calling for that, but when I start on the quarterly, I see a big cup and handle, and no reason, and already did the ABC bit, right? We already did this into a rising 20, so there's no reason to have to do that again. We've already reverted to zero, and we're rallying, so there's no reason to head back to zero. Right? Like look back here when the rally started. Look back here when she got above zero, she comes back down, but we never were below. We've been above this whole time. So what that could set up is something like this. and we're all the way back down here again. Right? Price gets back down to this POC. All right, so I don't know if that's what's coming. I'm just pointing out if, in fact, equities outperform and equities rotate into IWM and IYT and some candidates that I have in SPY, and it's not gold, then gold could certainly be pulling back to at least here, at least there, if not here, and here. So we're just going to have to see how this one plays out. But gold right now on the ratios is saying has a high chance of outperforming SPY. So I'm watching gold quite well into this gap fill on the weekly. PPO back to 0, which is very healthy. And daily rolling up right at the 200. All the moving averages starting to get back to close to each other. So there's really no trend here yet. Right? It's telling you that, yes, we're in an upturn, a trend, long-term uptrend, intermediate term downtrend, short-term uptrend. And that the probabilities say to keep an eye on gold this week. Right? And so when I throw the ball around the horn, something like ENPH, which I believe is a rotation candidate, she's breaking the 50. Pull back to long-term uptrend. You know, we throw the ball around the horn to ARC. You know, is this really just an ABC into a declining 20? It sure looks like it. Right? So here's your 1, here's your 2, here's your 3, here's your 4, and now we're coming all the way down for the kill. All the way back down to this level here. You know, $22, something like that. I don't know. I can tell you that monthly found a supply, broke last month's low, overlapped the entire year of trading range. All of it's been overlapped now. And what happened on the weekly? Just to pull back to the 50. Okay. But the histogram is flipping negative. It has flipped negative. Is this a bullish Harami reversal at support? It's definitely possible. Is this the first throwback of the 50? Yes. The slope of the 50, though, is 0. So I don't really have a lot of conviction in this trend. The long-term trend is down. All right. But the monthly histogram is positive. So we've got to take note. Is this something like way back here? I don't know. You know, I really don't know. I just see ABC up, and what that means for ARC and everything within it, like DKNG, is that this is probably done. And then you look at this monthly chart, and that's not a pretty candle. Zoom into the weekly. We've got the doji. Boom, right back to the 20, trying to catch a bid. But again, what has that done to momentum? It's rolled the momentum. So if you've rolled momentum on the weekly, zoom out to monthly, look for the 5 to break. And what? A pullback to the 10. That's kind of just how this game works on every time frame. Looking at bonds. Okay, did we just get a double bottom here? It's possible. We don't have the weekly, monthly buy yet. We don't have the quarterly buy. Looking at the yearly chart, I just wanted to pull this up real quick. Like, we're going back to 2000. All right? That's how crappy performance this is. But it's possible she's coming right into demand again. All right? So, looking at the weekly, it's very obvious a downtrend. I think $80 is in play, but this double bottom held. Okay? So are we really just getting a triangle like this that's going to play out over time and then she collapses? We'll have to see. That's what the structure is saying. The structure is saying that this is a descending triangle and that we are rallying here, but we haven't even gotten above a declining 5. So the bears are still in full control. But last week's volume is pretty good. But either way, this is not the chart. We've already identified it's GLD. Looking at UUP, We're starting to fill some gaps up here. This is a sell. This entire zone on cash is a sell. Okay, this entire zone, and that's where price is. And this entire move looks corrective. Okay, so big move lower on gold, retracement, big move lower again. That's kind of what I'm seeing here. Not on gold, on the dollar. UUP monthly is still bearish, still has not reverted to zero. Histogram is still negative, which means sell all these rallies. And again, I don't know why you couldn't just have something like this, reset sentiment completely, make everyone think the dollar's dead, and then hit them again with one big move like this. So, you know, but from down here, right? So, not making that call or that prediction from here. It's buy the dip. Any dips into the 5 and the 10 are for buying. So 28 will catch a bid. Back down here, this POC definitely agrees. And this is a breakout. There's no other way to view this, right? Big trading range, breakout. However, there's a lot of Swiss cheese gaps up here. A lot of gaps. And these gaps will find supply. That's how it works. So I will look at Crocs just for one more minute. We did get the bullish Harami look over here, which is kind of what we were hoping for, because I am long this stock. Right kind of where we expected. PPO trying to flip, histogram trying to flip. I mean, has been under pressure for 4 months now. Not exactly doing well. And quite frankly, what I want to point out is this is a breakaway gap. This is a runaway gap. No? I mean, they had a ton of volume. Used the measuring technique. This thing is not going to bottom until almost November 1. Okay, so if you zoom out, what does that look like? It means probably a pullback to here. 83 to 66, this whole zone. And it's possible that it's just the 50, which is right around at 80. But what I will point out is I'm very interested to see how this month closes, okay? If she can get a monthly reversal candlestick here, then this thing could be off to the races next month. And if she doesn't, this thing's putting in the monthly sell. Close below the 20. Histogram flips negative, loss of uptrend line. The pullback at minimum should be 60, 70 bucks, and at maximum could be all the way back down to here. And again, this aligns with just IWM doing nothing before the real move begins. And again, if you come back here, this is a massive zigzag all the way down here, this move. It does not overlap with what we had here. So we still expect 1, 2, 3, 4, and then a much larger rally in the future where Crocs will participate. And fundamentally, I think the company's doing very well. So this is what I see for Crocs in the future. It's just going to take probably 2 or 3 years, and it will take IWM leading that charge. So it may not happen on IWM until this pattern completes, right? Don't know. We're just going to have to watch. I don't have a lot of conviction either way. I have a lot of conviction in NVDA is likely topping call. I could be wrong on that, but we're going to wait and see. And I'm going to see how these ratios play out. And if gold starts to outperform SPY, I'm going to continue to liquidate and move into defensive assets. And if SPY gets its footing at around 420, which basically means another leg lower, then I would expect gold and other defensive assets to underperform, and rotation into things like IYT to actually yield. Because right now they're the ones that look good. IYT and IWM less so, but IYT is really a textbook throwback on a triangle right now. So if they can catch a bid and get the ball moving, that rotation play is definitely where the money will be. And highlighting the names, whether it's Uber, whether it's something like EMPH, whether it's, like the next NVDAs is what we're trying to find. But at this point, we're not even sure that's on the table. It's possible that it's a rotation into gold and that equities will continue to climb for quite some time. So I just don't know yet. Next year is the election year, and we know that year is likely to be flat, and that year 3 is the best performing year. So we expect this year to continue to be good into the close. December is still 3 months away, so we've got a lot of volatility between now and then. All right, if you like the video, hit the like button, share it, subscribe. I'll see you next week.